This week we're going to highlight the latest crop condition updates from the USDA as well as the short-term weather trends. Then we're going to turn our attention to the export sales for beans, which continue to be very light. We're going to wrap things up this week looking at trends in November bean futures. Hi, this is Brian Basting with Advanced Trading. Let's talk about the soybean market. We've moved in the middle of September now, and we're looking at the start of soybean harvest. Let's take a look at the latest crop condition updates from USDA. The USDA on Monday of this week pegged good to excellent conditions at 63%. That's down a point from last week, and now it's actually down a point from last year. Notice across most of the U.S. there, we did see deterioration. The exception was some slight improvement seen in Nebraska and Kansas. Let's take a look at the history of the crop condition index now. Notice we're looking at a season low now for 2025, and actually it's right in line with levels we saw back in 2020 as well as 2024, but it's below the level we saw in 2018. Let's take a look at crop maturity here. We're looking at soybeans dropping leaves now. On average, U.S. soybeans dropping leaves increase approximately 37% between September 14th and the 28th. So the next couple weeks, as usual, this crop will mature quickly, and we'll be looking at some big harvest activity at the end of the month and into early October. Of course, as harvest begins, weather is very critical. Let's take a look at the short-term trends. Our slides this week, as usual, are courtesy of T-Storm Weather. We're going to take a bit of a different tack this week. We're going to look at the last 30 days of precip, very critical for beans during pod set and pod fill. We're looking at 30 days from mid-August to mid-September. Notice all that dark green area there was much below normal precip the last 30 days. Last 30 days is a proxy for subsoil moisture. Let's extend our horizon now, though, and look at the last 60 days. This is more of a proxy for deep subsoil moisture. Notice there's still some dark red there, but not near as much over the last 30 days. As we move further north especially, we actually saw some above normal precip totals over the last 60 days. So a key test for bean genetics this year. How did the crop fare during this dry spell the last 30 days compared to that ample moisture we saw earlier this summer? Let's take a look at the short-term forecast now. Wednesday through Saturday of this week. All across that green area there, primarily in the western belt, we're looking at a disorganized system that's going to move very slowly, maybe a ½ inch to 1.5 inches of rain. We're going to narrow our horizon now, if you will, and look at the next 7 days of precip. Now here looking at the next 7 days, you notice the west of the Mississippi River across Iowa, Minnesota, South Dakota, Nebraska, anywhere from 1 inch to 2 inches of rain. So that area is going to be very slow, whatever harvest has started. But as you move east of the Mississippi River, Illinois, and especially Indiana, Ohio, Michigan, very little rainfall over the next week. Let's shift gears now and focus on export sales. Now this slide looks at the unshipped export sales of beans as we start the 25-26 crop year. What I want to emphasize here is first, there's no Chinese business. There's no red bar there on the books. Very critical to continue to monitor trade talks between the U.S. and China. The other thing is we're still seeing exports from Brazil. In fact, the second week of September saw some big bean exports from Brazil. Bean shipments increased 1.0 to 1.7 million metric tons, and it actually was 18% higher than last year. Let's wrap things up this week looking at trends in November beans. Now, November beans, as we tape here on Tuesday, have rebounded a bit, trading near $10.50 a bushel. Notice that crop insurance pricing period is in October. There's still room for price volatility between now and then, both to the upside and the downside. That's why we continue to strongly encourage you to work closely with your trusted risk management advisor to manage price movement and avoid price prediction. Now, if you'd like more information, please feel free to contact us at 800-664-2321. We'll put you in contact with one of our risk management consultants who'll be happy to visit with you at your convenience. And remember, we upload every Wednesday. Make sure to subscribe to our channel to never miss an update. Thanks a lot. Have a good week.